Welcome back everyone to another market review for E-mini NASDAQ, and today is September 17th, Tuesday. Now, as a friendly reminder, tomorrow is FOMC. So again, usually on Tuesdays, especially pre-FOMC, they're not going to be the cleanest. Monday, we also didn't have really clean price action. So again, it's caution practically from till Wednesday till Friday. And I'm going to be showing you guys how you could have possibly framed the setup maybe for that 1050 to 1110 macro, because really all I was looking for was to be a seller due to us being really above that midnight opening price. But even that, so I didn't really like the price action. It was really choppy. So hopefully tomorrow we're going to get some cleaner price action, or even Thursday as well. So jumping right into the analysis here I'm on the weekly chart for NASDAQ. And if we zoom in here, the only level that I had regarding that sell that we could have possibly framed up during that macro was this new week opening gap. So if you guys take the close here and the open of these weeks right here, that's your new week opening gap. Now here we are on the daily chart, and I didn't really have anything marked here on the daily. The only thing I would say is, we're in this daily order block right here. If you draw that out, look at the bodies respecting the consequent encroachment of it. But again, I'm ideally looking for this main drop here, these really clean highs, as I am bearish on DXY. And jumping to the 1 hour chart, and as we can see here, like I said before, look at how we are above that midnight opening price. At the time of the possible entry here, you're looking at almost 0.7%. And again, we're also utilizing that 10 a.m. opening price for the power of 3. So you're above 10 a.m. opening price and midnight opening price, indicating you're in a double premium. You also tap into the new week opening gap, which I'm going to show you guys a little later. Something else to note is look at how price is taking buy stops leading up to that session specifically. So it's really important. You can see this consolidation here. We take buy stops there, another consolidation with equal highs, boom, and then we take it right after as well. And here we are on the 15-minute chart, and really it's going to be the same thing. Like I said, remember, we're taking buy stops above, buy stops above. Something else to note is that this is somewhat of a low resistance liquidity environment, as you do have some swings here, but there's a lot of gaps being left behind. So all this upward movement here should allow price to really fall down rather quickly. But as you can see here, we've just been really consolidating during that whole session. Like I said before, I didn't really like any of this. I'm going to show you guys how you could have possibly framed something. But at least to my liking, I didn't like it because it's just we're just chopping around, which is expected because tomorrow is the FOMC. So today, really, everyone is sort of, keeping their money on the sidelines to see what Jerome Powell is going to say. And here we are on the 1 minute chart. And what I was looking for to see as possible targets was these equal lows down here. If we were to get below this bullish order block, that could have been one of my main targets for the sell, and these equal lows here as well. So again, we're seeing price continuing to take buy stops, which is what I like. I like that about price. We're taking buy stops, low resistance liquidity environment right in here. But again, I didn't really like the way we displaced here. It was rather minimal. But really overall, as we can see here, we're just chopping up and down, almost like a seek and destroy, because you're taking buy stops, then sell stops, buy stops again, sell stops, buy stops. So it's just a lot of chop back and forth. So all this really to me is just mainly consolidation. But zooming in here, and let's say, for example, if we were to frame some sort of setup, remember the macro is going to start right here at 1050. We have this low resistance liquidity environment, as again, there's really no swing lows or highs in any of this. It's simply just gaps that we're leaving behind. And once that macro starts, look at how the bodies are respecting that new week opening gap. That's what you want to see. We then have a bearish order block in here because this up close candle was engulfed by these two down close candles. We see price trade lower, creating a fair value gap. Look at how the bodies respect the consequent encroachment of this fair value gap. And we see price do a little damage, tapping into the consequent encroachment of the new week opening gap, as well as tapping into the bearish order block. And then we see price trade lower just before hitting that 11 a.m. mark. Now, all this fast moving displacement downward was expected because, again, remember, we had this low resistance liquidity environment. So that's something to really note if you're really engaging within this low resistance liquidity environment. But in addition to remember that you also have that macro, and here's the top of the hour for the 11 a.m. start. So again, I didn't really like any of this price action. Hopefully we're going to get some cleaner price action starting tomorrow or Thursday. So I'm going to be sitting out on the sidelines till we see any kind of other price action going in for this day, because it was just really a lot of chop. Like I said, though, I did like we were trading into a deep premium because we're really above the 10 a.m. opening price and the minute opening price. It's just the way this was delivered wasn't really the greatest. And here we are on DXY on the daily chart. And I was saying in the previous video that I was looking to be bearish to see if we could take out this daily sell side liquidity here. But it looks like we're performing a little bit of a manipulation leg as we take sell stops below this low. And we could possibly see DXY being bullish for the next couple days, maybe trading into this volume imbalance right in here. And if not trading into this volume imbalance, we might trade up into this liquidity void up here. So here we're on the 1 minute for DXY, and an easy way to really, know whether you're going to have a higher probability day or a lower probability day is really understanding that. So let's say, for example, you're bearish on NASDAQ. Ideally, you want to see DXY building in a deep discount so that during those hours, it can move in the opposite direction. Especially you want to see it build below that 10 a.m. opening price and the midnight opening price. But as we can see here, let's mark out that 10 a.m. opening price to have it as well. We can see that price is also above midnight open, which also NASDAQ was. And although you could say, it is building in a deep discount, at least for that opening hour, the main thing is it was still very choppy. We're almost seeing, a consolidation here, consolidation somewhat here. And the delivery wasn't as clean as we usually get. So, by utilizing DXY, especially knowing, whether you're in a discount or premium, it's going to help you gauge the direction that you're looking for on a particular asset, which it could be NASDAQ, it could be yen dollar, it could be GBP, it could be practically anything. So that was today's market review. I hope you guys found this video insightful. Please be sure to comment down below. Also, join the free Discord. It's going to be in the description below as well. Like, subscribe, and I'll catch you guys in the next market review. Peace.